Hey everyone, welcome back to Talk Tickers. Today we are diving deep into Loma Negra's second quarter 2025 earnings call. And wow, what a report! The results showed this real tug of war between incredibly strong volumes and just collapsing profits. And believe me, the market delivered a swift and pretty dramatic verdict.
Okay, so here's what we're going to cover. First, we'll look at exactly how the market reacted, the verdict, so to speak. Then we'll get into the weeds on this tale of two tapes, this major conflict in the numbers, and break down management's plan to fix it. After that, we'll look at their guidance, the risks ahead, and then we'll wrap it up with our final take and our official rating on the stock. So the earnings dropped after the bell on August 7th. The next morning, when that opening bell rang, investors, well, they didn't waste any time, did they? The verdict was in, and it was clear.
The stock just plunged, down nearly 8% in one single day. And we're not talking about a little dip here, this was a massive drop, wiping out a huge chunk of recent gains.
But it's the conviction behind the drop that tells the real story. I mean, look at this. Trading volume just exploded. We're talking 2.7 times what it was the day before. This was not a slow leak, folks. This was a stampede for the exits, and it tells you that some serious players were concerned.
So what lit the fuse on this sell-off? Well, it was a classic case of headline misses. Both earnings per share and revenue came in below what the street was expecting. Now, yeah, there's some funky accounting stuff going on because of Argentina's history with hyperinflation, but at the end of the day, the market looked at the big, bold numbers, and it did not like what it saw.
And you know, the headlines pretty much wrote themselves. The media immediately zeroed in on the main problem. This quote from Seeking Alpha just nails the narrative that took hold. Forget the details, the big picture is that profitability is under some serious pressure.
So this begs the question, right? Why did the market freak out when parts of the report actually looked pretty decent? And that brings us to the absolute heart of the matter for this quarter, this real tale of two tapes.
And this slide lays it all out perfectly. On one hand, you've got the bull case screaming growth. Cement volumes are up a whopping 11% as the economy in Argentina recovers. But then you look at the other side, and it's just a bloodbath for profits. Adjusted EBITDA collapsing by over 30% as those margins just got totally crushed.
So what is going on here? It all boils down to one thing, margin compression. Think of it like this. They're selling more product than ever, but they're making way less profit on every single bag that goes out the door. The core profitability of their business was eroding, and it was happening fast.
And management didn't shy away from this on the call. The CEO, Sergio Faifman, basically said, look, the rules of the game in Argentina have completely changed. The country is moving away from hyperinflation, and that means that magic wand they used to have to raise prices all the time, poof, it's gone. Now they're stuck in a tough, competitive market without that pricing power.
Okay, so things are tough. What's the plan? Let's take a look at management's recovery playbook, because they've laid out a pretty clear two-part strategy to fight back. It's a really classic defensive playbook. Step 1, secure the perimeter. Make sure the finances are solid. Step 2, get smarter on the battlefield. Innovate your product to stand out in a crowd. So first things first, that funding. Resilience. In July, they went out and secured a big chunk of cash, over $112 million to be exact. And this is just smart business. They're shoring up the balance sheet, pushing out their debt payments. It gives them breathing room, you know? It keeps their debt levels manageable while they navigate these really choppy waters. It's a solid defensive move. Okay, so with the finances stabilized, what's next? Part 2 of the plan is all about product innovation. And they're putting their money where their mouth is, with a nearly $70 million investment.
And here it is. This is what they're spending that money on. It might just look like a smaller bag of cement, but this is a really strategic move. They're trying to change the conversation. Instead of competing just on price, they're competing on safety, on efficiency, on being a better partner for their customers. It's a clever way to defend their turf.
All right, so that's the plan. But what about the future? Let's dig into management's guidance and the major headwinds they're sailing into right now.
You know, despite getting hammered in Q2, management is really sticking to their guns. They're still calling for double-digit volume growth for the full year. And they're telling investors, hey, just wait. We think margins and pricing are going to start getting better in the back half of the year.
But, and this is a big but, getting there is going to be like walking a tightrope. On one side, you have these big potential tailwinds, right? If public works projects get going again, that's huge for them. But on the other side, the risks are just as big. What if this price war continues? What about political drama with the elections? It's a real balancing act for sure.
Okay, so we've seen the good, the bad, and the ugly. let's put it all together. What's our take on Loma Negra? What's the next call?
The next few months are, and I mean this, absolutely critical. Circle early November on your calendar. That's the Q3 earnings release, and it's going to be the first real report card on this whole margin recovery story. Beyond that, keep an eye on the macro data out of Argentina. That's what we'll be watching.
So, that brings us to the big question. With this massive tug of war between strong sales and just terrible profits, what's our rating on the stock?
After digging through everything, we're landing on a market perform rating.
And why market perform? Because it really is a story of a balanced conflict. The positives are real. The volume growth is great. The balance sheet moves are smart. But the negatives are just as real, and they are severe. That margin compression is no joke. This is the definition of a show-me story. The ball is in their court now. They have to prove they can fix this.
So yeah, we're going to be watching those Q3 results like a hawk. Until management can prove it has its pricing power back, this stock is basically stuck in neutral. A story of huge potential being wrestled to the ground by intense competitive pressure. The key question for investors is this: can a company innovate its way out of a pricing war? We'll get our first big clue in November. This is not financial advice.